Bank of India joins us as well. Nilesh, Parikh, the Associate Director at Edelweiss Securities, has also joined us. Good morning, Mr. Gupta and Nilesh. Thank you very much for joining us. Mr. Gupta, yesterday we had that meeting which Mr. Tiwari, the Union Bank chairman, spoke at the end of it to the press and said that it was inconclusive. We've been getting a statement from the Reserve Bank itself, the governor, that he wants balance sheets cleaned up or assets provided for by April 2017. What exactly is the dialogue between RBI and the banks? What exactly do they want to provide that you are not providing now?
No, but I think as we said earlier, I was not present in the meeting, so we haven't had an internal discussion on this so far. So I don't think it will be proper for me to comment on that meeting right now.
I'm not referring to the conversation in the meeting at all, sir. The Reserve Bank separately told us, and the governor as well said, that they have been having individual meetings with all the banks or conversations with all the banks. And we know for a fact that, I mean, this was an on-the-record statement from the governor, that they want you to provide more. So is the problem with the CDR cases where promoters have not brought money? What exactly is the provisioning size you are looking at which might fall on your plate before the year is out?
No, there is a dialogue that is going on between the banks and the Reserve Bank of India. I don't think that this has reached any conclusion. So unless we reach a stage, where there is a general broad agreement on what needs to be done, I think it will be premature to start talking about that. I think the intention basically is to see that, how the bank's balance sheet can be made healthier if any provisioning has to be taken so that the banks are able to do that. And then they can resume fresh lending to the sectors. And I think as far as lending is concerned, the banks are going ahead and doing. It's a question of, what kind of demand is there in the market. So I think we need to probably give it a little more time for the dialogue to reach some conclusion before we take a call on that.
Okay, let's get Nilesh Parikh, who's the Associate Director of Edelweiss Securities, also into this discussion. He tracks a lot of these banking stocks very closely. Nilesh, hi, good morning. Many of these PSU banks, the stocks have become really cheap now. In fact, names like PNB, Bank of Baroda, Bank of India are all trading at less than one-time price to book, which is forward. FY17, that is. Do any of them become attractive now, or do you think that we'll have to wait a bit for a couple of quarters to see how the asset quality trends pan out before taking a call?
Yeah, good morning. So, from a PSU bank's perspective, the way we've looked at the space, so they've been quite attractive from a valuation perspective, less than book for quite some time. The way we've seen this is that we've tried to differentiate between banks, the larger banks and the smaller mid-sized banks. We believe that the smaller mid-sized banks will continue to consolidate, given that, RBI along with the finance ministry has also asked them to, find their own niche. And some of them are in dire straits of capital. So our preference has largely been towards some of the larger banks, specifically SBI and Bank of Baroda, where we believe that there is a strong case for them in terms of business growth. The capital is very much adequate, and I think there's a strategy for them to actually kind of take on in terms of a market share perspective. Plus, asset quality is obviously not comparable to the private sector banks, but it's not, on the other extreme that we've seen for some of the smaller state-owned banks. Yeah.
Okay. Mr. Gupta, there was also news that we picked up from the Reserve Bank that they are a bit worried that in the strategic debt restructuring cases, banks as a group have 18 months to find a promoter, and for that entire period, they don't have to provide for those loans. Is there any indication from the Reserve Bank that you should do some precautionary provisioning for this lot till you find a new promoter?
No, I think, this has just come actually, and I think there are only few cases where we are looking at this as an option actually. I think we need to probably give it a little more time to see how it really pans out and work actually. I don't really think there is anything on provisioning specific as such which has been told to the banks.
Okay, but what is the dialogue between Reserve Bank and the banks on the restructured assets? We heard very distinctly that Reserve Bank is a little uncomfortable in CDR cases where the promoter has not been able to perform his side of the commitment, either in terms of pledging shares or in terms of bringing promoter capital or in terms of asset monetization. Do you suspect, was that the area of conversation? Do you have to do more provisioning in those cases?
No, I think it's a part of the ongoing dialogue. As I told you, that I think it's very difficult to, slice and dice and say what exactly needs to be done in each of the cases. I think that's a very composite whole dialogue that is going on between the banks and the Reserve Bank of India. I guess at the end of it, actually, the banks will probably have to take a little bit of additional provisioning. How much fit that is really required to be done, I think we need to probably give it a little more time before we can take a call on that.
Okay. But what is your sense of the quality of assets itself? I mean, we get every day fresh reverses from the global market, which obviously we were not prepared of. Who was prepared for steel selling at $270? These shocks have come completely unprepared for the global economy. Therefore, do you think that there will be more bad loans or defaults in any of these spaces, or is most of that recognized?
No, I think, see, that is where the recovery is probably has been a little more prolonged than what we had anticipated. So a lot of restructuring was done in the past, hoping, some uptick to happen. So because of the global scenario, some of that recovery has not happened as expected. So which is probably the main reason for this stress, which has been continuing for longer than what anybody in the market expected. So I think, so everybody recognizes that it is a stress which has to be dealt with, and all of us are trying to deal with in the best possible manner, actually.
Okay. Nilesh, just come in on this one point. The RBI has asked banks to recognize more restructured assets as bad assets. But as Mr. Gupta was pointing out, there could be some further stress because of additional provisioning. Which are the banks that could be impacted the most because of this, you think?
So, when you look at the space in terms of the state-owned banks and the private sector banks, now typically we've seen the stress numbers be in a elevated range for the state-owned banks in the range of anywhere between 10 to 15%, and the private sector banks, specifically the corporate-focused banks, ICICI, Axis, in the range of about 4 to 5%. Now, our sense is that if there's a restructuring, if there's a common uniform method of recognizing assets, there could be some slippages, some increase in the headline numbers for some of these corporate-focused banks, and consequently provisions will have to be stepped up. But as a whole, I don't think it's what we understand when we our discussions with banks is that that 150 is a summation of individual accounts which are being given to banks. So probably from a overall quantum perspective we won't be able to comment, but our sense is that the range specifically could be specifically for some of these, the smaller banks could see a slightly increase in their headline numbers on asset quality.
So you have a buy on ICICI, yes, any of those banks, private sector banks, Nilesh?
Yeah, so yes, in fact, is our top conviction call. We have that's a top pick on our sector. We have a price target of about 1176, and I just want to make one specific comment here that when you look at the corporate focused banks, where the issue is largely emanating is on consortium lending. So some of these corporate focused banks like ICICI, Axis have been a part of consortium with some of the state-owned banks, whereas the smaller emerging banks like an Indus and Yes Bank have actually largely stayed away from the consortium lending. So my guess is that you shouldn't see too much of issues in terms of recognition, from a recognition perspective in some of these mid-sized banks here.
Okay, just a final word from you, Mr. Gupta. You said that banks are likely to have to provide more in the coming quarters. How much more might be the provisioning burden?
See, unless we have a conclusion on what exactly needs to be done, it's very difficult to say. I think that's a dialogue that is still going on, I think. So you need to wait for a little more time.
All right, we'll leave it at that, and we'll just go with the fact that there is additional provisioning that some of these banks would have to make. But Mr. Gupta, Nilesh, thank you for taking the time out. In fact,